This video is created by Jagrat Creation. It is on joint venture accounts. I want to solve one sum wherein Memorandum Joint Venture account is required to be prepared. Memorandum Joint Venture account is a statement that is prepared to find out the profit of joint venture business. We are required to prepare Memorandum Joint Venture account means such statement under the circumstances wherein partner records only those transactions with which he is concerned or the transaction to which he is a party to the transaction. No independent books of accounts are maintained. Joint venture business is not given a separate accounting entity. Partner records, transaction of joint venture with which he is related in his personal books of accounts, and at the end of the day, he claims profit, and for the purpose of claiming the amount of profit, Memorandum Joint Venture account is prepared. Now observe the sum that I intend to solve here before you. This is the sum that I want to solve here before you. I have already solved this sum in the other video, wherein all the transactions of joint venture, all these transactions of joint venture recorded by Hitesh and Shailesh. Now I solve the same sum once again, wherein Hitesh records only those transactions with which he is concerned. Shailesh records only those transactions with which he is concerned. And to have a claim in the share of profit, they prepare Memorandum Joint Venture account. So this sum you can find in my previously uploaded video. It has been solved, wherein all the joint venture transactions were recorded by Hitesh, all the joint venture transactions were recorded by Shailesh. In that situation, joint venture account was prepared. Memorandum Joint Venture account was not prepared. So it is a repetition of the same sum, but the style of solving the sum is bit different. Now see, I read the sum. On 1st of July 2016, Hitesh and Shailesh entered into a joint venture with a condition to share the profits and losses equally. It was decided that the Shailesh is to be paid a commission at the rate of 10% on sales made by him, and Shailesh is to be paid a salary of 1,000 per month. Joint venture started on 1st of July, concluded on 31st of March. So number of months for a joint venture period are 9 months. Salary is to be paid at the rate of 1,000 per month. So 9,000 salary to which Shailesh is entitled to. From the following were the transactions relating to joint venture. For a period ended on 31/3/2017, Hitesh gave goods worth 44,000 from his own stock and paid rupees 2,500 for freight and insurance. Shailesh purchased goods 40,000 at 10% trade discount and gave the same to the joint venture. He paid 1,500 for freight and carriage. Hitesh sold some of the goods for rupees 1 lakh and paid 2,000 for sales expenses. Hitesh sold remaining unsold goods 20,000 after adding 20% profit on the cost price and paid rupees 1,180 as carriage outward. Shailesh agreed to pay 500 for stationery purchase for joint venture from Shilpa Stationery bought on credit. On 31/3/2017, the joint venture business was closed and both the co-venturer settled their accounts. From the above particulars prepared in the books of Hitesh, joint venture with Shailesh account, wherein he is going to record all those transactions with which he are concerned, with which he is a party to the transaction to which he is a privy to transaction. So joint venture with Shailesh account is prepared, and to have his share in profit or to find out the share of his share in profit, he prepares one statement known as Memorandum Joint Venture account. Similarly, Shailesh prepares joint venture with Hitesh account. He is going to prepare the same type of Memorandum Joint Venture account and will ascertain his share of profit record in this account. Now let me start. Now, these are the details of the sum that I have read before you. First, I prepare in the books of Hitesh joint venture with Shailesh account. The partners have agreed to share profits and losses equally. So I write the profit sharing ratio at the top. First transaction. I am Hitesh. I gave goods to the joint venture business. So joint venture with Shailesh is a receiver, debit the receiver. So joint venture with Shailesh account debit to sales account is the entry. And for the expenses paid by me, cash goes out, cash account is credited, and I have paid these expenses for a joint venture business with Shailesh. So joint venture with Shailesh, that business is a receiver, and I paid the cash. So for expenses also, this account gets debited. So joint venture with Shailesh account debit to sales account, goods and joint venture with Shailesh account debit to cash account, expenses paid. Now next transaction. Shailesh purchased goods worth 40,000 at 10% trade discount. Paid 1,500 for freight and carriage. Now this is a transaction between Shailesh and joint venture. Shailesh contributes for joint venture. It is a transaction between joint venture and Shailesh. Hence not recorded in the books of Hitesh. Hitesh is not going to record this transaction because this is a transaction between Shailesh and joint venture. Now next third, Hitesh sold some of the goods for rupees 1 lakh. I am Hitesh. I sold goods for rupees 1 lakh. I got cash. Cash was deposited in the bank. So cash or bank account debit. The proceeds are received because of this joint venture business with Shailesh. This business is a giver. Credit the giver. So cash or bank account debit to joint venture with Shailesh account credit. And for expenses paid by me, joint venture with Shailesh account debit to cash or bank account credit. Now notice 1 lakh will be credited. Cash or bank account debit to joint venture with Shailesh account. Expenses paid. This joint venture with Shailesh is a receiver, debit the receiver. This is to be treated as a personal account. So joint venture with Shailesh account debit to cash account. Now Hitesh sold remaining goods 20,000 after adding 20% profit on cost. So to find out the cost, we should add the proportional expenses. So here I want to find out the cost on which I am going to add 20% profit to find out the sales price. The purchase price of the goods is 20,000. The expenses incurred at the time of purchase of goods. Hitesh paid 2,500, Shailesh paid 1,500. So 2,500 plus 1,500 are the purchase expenses. These purchase expenses will be proportionately added to the cost of goods sold by Hitesh. So cost of goods sold by Hitesh is 20,000, and these are the purchase expenses for the purpose of making purchase of 44,000 and 36,000. 44,000 is the goods purchased by Hitesh, and 36,000, 40,000 minus 10% trade discount. 36,000 is the purchases made by Shailesh. So total purchases made by them is 80,000. On 80,000 the expenses incurred are 4,000. So for 80,000, 4,000 are the expenses. What are the proportionate expenses for 2,000? So these are the expenses added 1,000. So you will get the cost of goods 21,000. To that you are required to add 20% profit. So 21,000 into 20% profit 4,200. So the sales price of this remaining stock is 25,200. And these goods are sold by Hitesh. He receives the cash or bank account debit to joint venture with Shailesh account credit. This is how this transaction gets recorded. Now next, 1180 expenses paid. Expenses paid for joint venture with Shailesh account debit to cash account. Shailesh agreed to pay the stationery expenses. It is a transaction between Shailesh and joint venture, not recorded in the books of Hitesh. Now Hitesh wants to have his share in profit, but before that I am required to give commission for the sales affected by him. Commission on sales is to be given at the rate of 10%. So 1,25,200 into 10% is a commission. It is a business expense, joint venture business expense. And in my personal capacity as a partner, I'm entitled to have this commission. This commission is my personal income. So commission income account is to be credited because all these transactions are recorded in my personal books of accounts, and the amount is to be debited because the commission is recoverable from a business, joint venture business with Shailesh. So joint venture with Shailesh account debit to commission account credit is the journal entry for this commission. Now next, salary, services contributed by Shailesh and for which Shailesh is entitled to have a salary. This is a transaction between Shailesh and joint venture. So it is not going to be recorded in the books of Hitesh. So I will ignore this transaction. After recording all this transaction, Hitesh is interested to have his claim in the profit. So Hitesh claims his share in joint venture profit. For that purpose, we are required to prepare one statement to find out the profit on the basis of matching concept. So I am going to find out the profit. By preparing a statement. The name of that statement is Memorandum Joint Venture account that is going to be prepared on the basis of matching concept, wherein all the expenses and the purchases made by Hitesh and Shailesh and all the revenues of joint venture will be considered at one place in this statement. So here I prepare Memorandum Joint Venture account. First of all, 44,000 is the purchase by Hitesh. Expenses paid by Hitesh. Shailesh purchased goods of 36,000. So 40,000 into 90% is the 36,000 is the purchase price. Expenses paid. Now sales 1 lakh credited to return the credit side of joint venture. Credit side means, for your understanding, I say credit side, but actually there is no credit and no debit because it's a statement. Statement do not hold debit and credit. So 1 lakh income recorded, 2,000 expenses debited. Now remaining stock sold at a profit of 20%. I have already made a working for this note and explained to you. So let me proceed further. This is the sales price. So this 25,200 being sales price is to be matched against the expenses incurred. So it is recorded on the opposite side. 1180 expenses recorded in this side. Purchases and expenses are recorded on this side in the statement. Revenues are recorded on this side. Difference between the two will be the profit. Now 500 are the stationery expenses. It is recorded in the list of expenses, purchases and expenses. Commission payable. 1 lakh plus 25,200 into 10% commission payable to Hitesh. So it's an expense of joint venture business and it is to be debited or it is to be recorded on this side to find out the profit. Similarly, salary 9,000. 1,000 into 9 months, 9,000 salary is also recorded in expenses, purchases and expense side. And from this revenue, total revenue 1,25,200, all these purchases and expenses are deducted, you will get the profit. This profit is going to be distributed equally between partners. So share of Shailesh is 8,000 and share of Hitesh is also 8,000. Now I have got a right to claim 8,000 profit from a joint venture business with Shailesh. So joint venture business with Shailesh, joint venture with Shailesh account debit to profit and loss account credit 8,000. Now I have recorded all those transactions with which I was concerned. I was concerned to have the profit. So I have already recorded the profit. Now I can find what the amount that I am supposed to pay or I am supposed to receive in settlement of the accounts. Here 1,25,000 are the receipts that I have made. From that, all these payments and my entitlement of profit will be deducted. So you will get the balancing figure as the amount to be settled. So I am required to pay 25,000 to Shailesh. So joint venture with Shailesh account debit to bank account credit 25,000. This is how the recording is being made in the books of Shailesh. After recording the transaction in the books of Hitesh, he prepares the account of Shailesh. Now I want to record all those transactions with which Shailesh is concerned. And just observe how I record all these details considering the modus operandi of preparation of Memorandum Joint Venture account. Let me start with the books of Shailesh. Shailesh prepares joint venture with Hitesh account. First transaction, Hitesh gave goods. It's a transaction between Hitesh and joint venture. So not recorded in the books of Shailesh. Now I am Shailesh, I purchased goods for 36,000. So I paid 36,000 for purchase of goods. I paid for that, so cash and bank account is to be credited. And the joint venture with Hitesh account gets debited because goods are supplied to Hitesh for the purpose of selling. So joint venture with Hitesh to sales account. Expenses paid by me. Joint venture with Hitesh account debit to cash or bank account. Hitesh has sold goods. These are the revenue received by Hitesh. Hitesh receives for joint venture. It is a transaction between joint venture and Hitesh, not recorded in the books of Shailesh. Now, Shailesh agreed to pay 500 for stationery. So I committed to pay 500 for stationery. I have committed because it's an expense of this joint venture business with Hitesh account. So joint venture business with Hitesh account debit to stationery marked account credit. So stationery purchase, or if I have paid cash for that, then cash account is to be recorded. Now commission, 10%. Who is entitled to commission? Hitesh is entitled to commission. It is a transaction between Hitesh and joint venture, not recorded in the books of Shailesh. Hitesh contributes his sales potential sales services to the joint venture business. It is a transaction between joint venture business and Hitesh, not recorded in the books of Shailesh. Now salary to which I am entitled to. I have rendered services to this business, so I am entitled to salary. Salary is my income. So joint venture with Hitesh account debit to salary income account credit. Cash account is wrong. I should write here salary account. Now Hitesh claims his share in profit for which we have already prepared Memorandum Joint Venture account. When Hitesh made a claim for share in joint venture profit, we have already prepared Memorandum Joint Venture account. In the same way, we will prepare the Memorandum Joint Venture account. The same Memorandum Joint Venture account is going to be prepared for the purpose of finding out the profit for Shailesh. So there is no difference. Instead of preparing two Memorandum Joint Venture account, one Memorandum Joint Venture account if prepared is sufficient. But here I say that now Hitesh claims his share in joint venture profit. So Memorandum Joint Venture account is prepared by Hitesh to find his share in profit. It is prepared on the same lines. The purchases and expenses are recorded on this side. 44,000 purchase and 2,500 expenses. Purchases made by Shailesh is also recorded on the opposite, on this side, purchase and expense side. Sales or revenue are recorded on the opposite side for the purpose of matching it. And 2,000 expenses. Hitesh sold remaining goods. You know the sales proceeds. Because I already explained this note to you. 25,200 is also the sales proceeds. That is recorded on the revenue. 1180 expenses debited. Debited means recorded on the expenses. That there is no debit and credit in Memorandum Joint Venture. This expense is also recorded on the expense side. Stationery expenses. Commission payable to a partner. It is also considered as an expense for the joint venture business. So it is recorded in the expense side. Salary payable to a partner is also considered to be an expense of the business. Recorded in the expense side. Now total revenue minus expenses, purchase and expenses, we get the profit. That will be distributed equally. So share of Shailesh in profit is 8,000. So Shailesh says that I should get 8,000 profit. From whom? From a joint venture business with Hitesh. So joint venture with Hitesh account debit to profit and loss account credit. Now the settlement is to be made because the business is over. So total of these are the contributions, these are the payments, these are the payments made by me to a business, joint venture business with Hitesh. So I should get this total. So 55,000 is the amount that I am going to receive at the end on settlement of the account. So bank account debit to joint venture with Hitesh account credit. If you remember, we have already arrived at the amount of 55,000. That is the settlement amount when we recorded the transactions in the books of Hitesh. Same result you get when you record the transactions in the books of Shailesh. This is how this sum is considered. I have tried to explain you this sum, explaining the theory details and also spelling out the journal entries here before you. I feel that you have followed all these things. Thanks to